Well, good day. Ira Epstein, and here we are with your financial market wrap-up, and I'm putting this out fairly early. It's about 5:45 p.m. Central Time. I want to wish all of my Jewish followers a very, very happy Passover. Now remember, Passover in America, we celebrate it one night, but go to Israel and other spots, it's a 7-day holiday. Matzah comes out, different things, you learn about it, and if you've watched the 10 Commandments, you really learn about it in a big way. That's where all this really comes from, the time of Moses. All right. So when we take a look for tomorrow, we have some data coming out we have to pay attention to. We get the weekly retail sales. They've been running near 5% increase, so you keep your eye on that. S&P Global Group will come out with the U.S. preliminary April manufacturing and service sector PMIs. The Richmond Fed, they're going to update their monthly manufacturing sector numbers for April. That's an important number. U.S. new home sales data. Well, we saw the sales were a disaster just recently when we were looking at the building permits, new home building permits, new home starts. They weren't the best thing that we saw recently. And the API is going to come out with their numbers at 3:30 p.m. So what took place over the weekend? Well, from my perspective, what took place is the game changed between Israel and Iran. They both hit each other. They both took the hit from each other. Neither did devastation to each other. That wasn't the goal. The goal was from Iran, I'm sending all my drones. I can send waves at them and I can do X amount of damage. Israel fired 3 missiles to show where they landed, near the nuclear sites, a message. And they didn't send the little bombs. They sent some fairly sizable ones, and did no damage. Nobody died on either side. Well, I understand a 10-year-old girl in Israel was hurt, but I didn't hear anything in Iran of any deaths there. All right. It's all terrible any way you go about it, but it simmered down. And it simmered down to the point where I said to my subscribers and to you in the weekend, I said, I think it now goes back to the proxies. Little did I know, and I didn't know until today, later this afternoon, when Reuters and other news broke, that on Sunday, in both Syria and Iraq, the proxies attacked U.S. forces where they were stationed. So we are back to game normal, and that got the stock market rally going. Nobody's expecting that this thing's going to end anytime soon, but we eliminated a big step where the U.S. could have been pulled directly into a war, and that wasn't what was wanted. And for the moment, that's been dodged. Has anything else been dodged? No. You're going to hear the U.S. is going to strike back at the people that are firing at them. Israel will probably take a break of 7 days in the amount of the campaign they do in Gaza, but after that's over, anything can happen. Once you see they start moving the civilians out, that is your clue that they're going in to finish up and mop up as much as they can with the Hamas group. That will be the thing. I do not believe there can be a negotiation for hostages because there is no negotiation when Hamas changes the game at every table they go. Israel shows up, the Hamas, it's 40 people, then it's under 20 people, but you got to pull out for 6 months and pull out all your troops. That's not happening. So get that out of your head. This thing's going to finish the way it finishes, and that's where we're headed. It'd be nice to think that it all ends in a different way, but I don't buy that. The bigger event is this week you got 1/3 of the S&P 500 companies reporting, 178 companies. If you don't get really good forward guidance, and if you don't get better numbers, watch out. This market's unforgiving because we're in a correction type thought. This market doesn't have anything on its hands to run with. Could that change? It could on Friday. What could change it is a surprise in the PCE, which I'm not expecting, but a weak set of numbers on monthly and yearly would get everybody's attention. They wouldn't be saying higher for longer. A strong set, like anticipated, where there's slight increases on monthly and yearly, keeps the Fed higher for longer. Can you get a September rate cut at that point? As I said, I think you got to have 3 weak months in order for the Fed to move, not 2. I think 3. So we haven't even had 1 yet. And this is one of their favorite indicators coming up. So I do think that's going to be the report of the week. For those of you that trade the yen, be careful. You've got a Bank of Japan meeting coming up, a policy. They can pull any surprise they want out. They're watching their currency slip. So far, they don't seem to be upset because it creates a bit of inflation. As the currency drops, and when they buy goods to import, it's a big island. Let's understand this. They're importing inflation. They want to see inflation. So there is an ulterior motive here. When we look at the E-mini S&P, the weekly chart, remember I kept saying to you over and over, if we correct, and I know I said this, just go back to the videos. I said, if we correct, this was the first break, and that was April 5th. We're now the 22nd. So if we break, maybe we can get to the 18-day average as we were coming down here. And you tell me that's not where you've gone to and where the battle is fighting right now. Does that mean it has to stop here? No. But often the first break to that number is an important number, and I teach this in the charting course. So you want to grab these concepts. I'll talk about the charting course at the end of this. You can see how the market has been in a down thrust here. What ended this? If you go back and you think about it, just think about it. When was the U.S. jobs report? How strong was it? It's back here. And that just set the Fed and the market realized that on the path, they're not cutting rates anytime soon. We didn't get any weakness in that. And then we had the CPI numbers come out, the PPI numbers. They're not weak. I don't know where you go with that other than you're saying maybe the market had priced in perfection all this year, and the reality hit that they're not getting the amount of cuts that they wanted, and that's what we're finally dealing with. Could be. And as these earnings come out, that is the tarnish that is on all these companies, and you keep that in the back of your mind. I don't see you running to be a quick buyer in too much right now on stocks. When we look at the break here, you've got a higher high, a lower low, a sharp vertical price break. I mean, a monster one. Remember, we were wondering, can we get a 2% break, and would the trade let you get beyond that? Well, you certainly got way beyond that, and you got to bounce. You bounced from the bottom part at the 100-week average, and often you get a big break, and a key moving average can do it. But if this gives ground, you've got opened the door up for down here. Where was the Bollinger Band during all this? Well, you were running it. And now you've stepped away from it, and that's good news. Now, if you break again, the support's above that support at 49.76 roughly. If you were to rally sharply, the resistance is now the 18-day average of closes. And in terms of momentum, you're embedded. And if you lose it, you got to close over 21. So I think tomorrow's the day that the pros are going to sell this market to try to keep it embedded. We'll see if I'm right or wrong on it. When you take a look at the micro NASDAQ, embedded, same type of thing, came up. Resistance to me is up here. I don't know that you can get that high in the market. That's the real problem. This is a lot weaker market than the S&P, which is flirting with losing its embedded reading, the bearish reading. This one would have to rally a lot to get that lost. So still more bearish. You lost it in the Dow. And again, the closest main moving average is what you rallied to. So when did we lose this, and how did this all work out? Okay, we know what happened today. Here's how you finished on Friday. And as you can see, you washed out, you went to the lower band again. And if you follow through, the first resistance is the 100-day, then the 18. The market went there, and that's where it's stalling right now. But you're still loaded with resistance at these two numbers in the market. In the Russell, when you didn't hold up here, the combination of the Bollinger Band and the 100-day average, the next spot on the chart was the 200-week average, which you hit. You never did get the real embedded reading going here, I think. I'm pretty sure on that, but let's take a look. Day 1, 2, you might have, 3. Yeah, you got it. And what did you do? Today you lose that reading. Watch. Here's the reading for today at 2240. And if you rally some more from here, up here, when you lose the embedded reading, the target would be the 100-day if it can get there. Let's see if it does that. But that would be the upside target in the market. The only time it can re-embed would be on Tuesday's trade. You need a sharp break in the market again, and you could do that. But you're up to a 27 reading already. It's sort of screaming at you. It needs a real big break to re-embed. In the 10-year notes, you still have the bearish embedded reading, so rallies are still bear market rallies here, and in the 5-year. And I think you're going to stay similar to that. You can get some short covering this week, but I think most traders are saying higher for longer, and they'll be willing to sell the rallies. Probably not go into the report on Friday because it's going to be a big report. It could get a very big reaction. Remember, I'm saying that to you now. If the report's bullish and it keeps higher for longer, it's probably supportive to the dollar. If the report's weak, it probably hurts the dollar rally right here. So I want to go on record saying that to you. In the eurocurrency, the market has still got a bearish embedded reading. It tried a rally. It didn't get very far, so you either want to be long the dollar or short the euro, as I'm seeing here. British pound is still acting bearish as can be. Breaks again to the Bollinger Band, finds its support, gets a little bit of bounce off of it. I told you the halving event was coming, and one of you wrote, and I appreciate that. You can figure out how many Bitcoins a day are produced if you do all the math, and that's how they came up with April 20th. No, I don't know the hour the halving would happen, but we had the pretty good idea of the time frame, and as it turns out, that is when it basically took place. Does it matter if it's the 20th or the 21st? I don't think so. You knew the event was going to happen, and the first reaction often is the wrong one. It gets bullish, and then the market often pulls back. It's when the market tightens because it's not going to get further supply. This market's got now new investors, the ETFs in the marketplace. You don't have to buy the coin itself. You can leverage different ways. It's the first rally back to where it should stop, the 18-day average, and now it's got to figure out what it wants to do. But it's got a new set of bullish fundamentals. And you stepped out of the pattern of lower highs, lower lows, and you did that on Friday. And today was the follow-through to the 18-day average. Now, when we take a look at Brent versus WTI oil, if it continues to drop, look for the $5 level, $4.99, the 18-day average of closes. I was hoping today, and we didn't do it, I wanted to hit that Bollinger Band, be able to say, that should be it. The market is oversold. When you come to WTI, I think it got pretty darn close here. You take a look at this. 80.70. And the Bollinger Band was 80.75. Where did the market do after that? You got your bounce. So these things, and that's why I say these courses are important because you can do this yourself. You don't have to watch me. You should be able to do a lot of this. Gasoline, where'd you go to? You're oversold now. Again, I got caught in this market in this break, and I knew to stay away from it this time. And I said, I think it's going to hurt these people one more time. And it most certainly did. In main nat gas, you act like a bottom is trying to form here in the market. I didn't say bullish yet. It's trying to form a bottom, and that's important. You can almost see the sideways action that is just going on and on and on in this market. So you put it together. You try to come up with game plans for yourself, and that's one of them that I try to help you with. I teach, and the way that I teach is I start you with a PowerPoint, then I take you to real charts. I don't put labels on the charts. I don't want you to see what we're charting because then you'll be able, your mind goes a different way. You got to learn the patterns. You got to learn how you could draw it yourself on a chart. And I teach you all that and then let my indicator do the work for you. I teach you the different moving averages. When you watch this, you're only seeing a couple that I use. I use way more than you see here. Then, how do I put together slow stochastics with Bollinger Bands? And something you never see here is one of the tools that is hit the most often by me. By not me, the charts. Window envelopes, which is always a profit objective, up or downside. And they go in sequences. So I show you how that is. I show you how to work with the numbers and give you ideas as to how you work with them, because they're often close to Bollinger Bands at extremes, and you want to pay attention because sometimes you won't hit the band, but you'll get to the window envelope. So I put it all together, and I do it in a way that I think makes sense. Number one, there's 45 chapters. It's about, on average, 10 minutes a chapter. You got about 4.5 hours when you're through this in the videos. You get with it the full charting software, $160 value. You get access to my full research and my morning videos. If you don't have them already, you're going to get them. And if you take one, you don't get the other, you'll get the other one, another $76 value. So you're already at $230. And I've taken the course and I'm giving you a 10% discount. So you're having what you would pay. That's what I'm getting at. So if you'd like to learn, it's not about the money as much as learning. Then you put in the effort, iraepstein.com. Go to the word education, the new charting course, you'll see it. You can move your cursor up here, it's right there as well. I'm Ira, I'll catch up with you all in the morning, and you have yourself a good evening. Take care, happy Passover to a lot of people out there. Take care.